But let's get started with today's market action with the Calvasina Letter founder and editor-in-chief, Adam Calvasina, and RBC Capital Markets head of equity strategy, Lori Calvasina. Guys, good afternoon. Adam, what's the signal in this tariff noise? What do investors know now that they didn't know a week ago?
Look, I think, right at the market open, we published a note for our subscribers basically saying, we got to see how all this noise kind of shakes out. And our hunch was that a lot of these tariff threats are really threats and posturing that ultimately are going to lead to buying opportunities, particularly if you look at, close U.S. allies like Canada, Europe's now, the European Union's now in discussion, even Mexico. A lot of this appears to be less about necessarily shrinking that trade deficit, but rather just kind of obtaining different policy measures that President Trump wants to see. And these trade wars might last for a matter of hours or days, like we saw today with Mexico now being delayed by another month. I think what this really means is you're going to see a lot more threats. You're going to see a lot more volatility. But we ultimately think a lot of these dips are going to be great buying opportunities. And today, the S&P is already up, almost 100 points off of its low. That's just in one day. We're now less than 2-3% from an all-time high. So I really think this is a tradable opportunity, and we still do push higher ultimately.
Okay, Lori, even if we don't really want a big trade fight, if we're swinging chairs in the room with the trade China, there's a chance, right, that something gets broken. So how should investors calculate the risk?
I think it's a great question, John. And if I think about what I learned today, just from talking to some of my colleagues at RBC who cover specific industries, it does seem like certain areas have already been baking in some pretty onerous, tariff outcomes, or maybe not completely priced them in, but got a lot of it priced in. But we didn't see that at the broader market. And I think what we learned today was that the capacity to absorb bad news at the broader market level is pretty low. So I think that's one thing we have to keep in mind, that certain things can be true for industry, but not necessarily true at the broader index level as well. I think going forward, what we have to be prepared for is more volatility. I think we all have to be humble as forecasters and realize that not everything is completely forecastable. That's an uncomfortable position for a lot of us on Wall Street. But, I was just really struck by how, everything that your prior guest just said, about look, this is a negotiation tactic. I heard some people who were very confident about that over the past week that we're not very confident about that idea this weekend. And then all of a sudden their confidence came back after we got the delay on Mexico. And I think there are just going to be some things that we have to take as we go. And of course, we look for buying opportunities, but we also have to look for opportunities in which we may need to be a little bit more defensive here and there. And I think, again, we had very extreme sentiment and positioning coming into this move today, very high valuations, and we took a bit of a hit when we got the bad news. The capacity to absorb it was just not there at the broader market level.
Yeah, and I want to dig a little bit further into this, because whether it's a negotiating tactic or whether we are on the cusp of a bigger, broader trade war, Adam, and I realize there's a lot of moving parts and a lot has to happen to actually see all of this manifest simultaneously. But if you do see tariffs put in place on certain goods coming in from certain countries over the longer term, you have to weigh that against possible changes to tax policy, deregulation, major cost cuts, which was the other news item of the weekend with Doge and Elon Musk, and the implementation of things like AI. So it is all working together, and I just wonder how you game that out as an investor and think about not just the near term, but the longer term, whether it's into the end of this year or beyond, and what that means for investing in this market.
Yeah, I mean, look, I think it's like a scale, right? On one hand, you have a bunch of positive things. On another hand, you have a bunch of different things that are weighing on the market. I do think, just more volatility is expected, generally speaking. But I maintain my view that I think a lot of these dips are bought, especially now we have a Fed pause effectively priced in through at least June of this year, maybe later.